Welcome. In this video, when is ZBCN coin big rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we approach the chart, we see that the current price action is clearly in the second wave phase within the framework of Elliott wave theory. Due to the Elliott wave structure, each correction and bullish phase in this model, which consists of 5 main waves, represents the psychological and structural cycle of the market. The second wave, which we are currently in, is the correction phase that follows the strong upward movement that started in the first wave. And this correction is usually a period when investors turn to profit-taking and some of them become skeptical. Although the second wave is a downward correction, the nature of this wave is such that it is an important phase that sets the stage for the third wave and also provides investors with a new buying opportunity. Fibonacci retracement levels are of great importance at this point because the second wave often ends in the Fibonacci range of 0,618 to 0,786. This area represents critical support levels for the price to start its upward movement again. If there is a strong reaction from these areas, it could be an important signal that the third wave is about to begin. The third wave is the strongest and most volumetrically intense phase of the Elliott structure. This wave coincides with a period of peak investor confidence, when most market participants are bullish and news flow is generally positive. From a technical analysis perspective, the third wave is never the shortest wave and is often the longest and most bullish. Therefore, Fibonacci extension levels are used to identify potential targets for the third wave. The levels we focus on here are the Fibonacci extension ratios of 1,618 and 2,272, because the third wave tends to extend at a minimum of 1,618 times the length of the first wave. If the market gains momentum and buying pressure intensifies, then it would not be surprising to see a rise up to the 2,272 level. These levels are not only technical but also psychological resistance areas. In other words, even if there are profit sales when the market reaches these points, they serve as important reference points for the continuation of the trend. Therefore, once the second wave is completed and the upside breakout is clear, it is quite possible that the price will make a rapid upward move once the third wave is triggered. The most important thing to do at this point is to observe the bottom of the second wave well and read the start signal of the third wave correctly. Thus, maximum efficiency can be obtained from a high potential uptrend that may occur. The third wave is the longest and most sudden type of wave, so it is useful to be ready. When we take a broad look at the chart, we see a very characteristic technical analysis pattern, the W pattern, which is a common pattern in the trading community, named after its shape. This pattern is also known as a double bottom pattern and is a powerful structure in technical analysis that signals a possible reversal after a downtrend. The formation of this pattern can also be seen as a reflection of investor psychology on the chart and can often be a precursor to major price movements. When the current price movements are analyzed, it is seen that the first bottom, which is the first stage of the pattern, was formed with significant selling pressure in the past. At this point, market participants experienced a serious wave of selling. The price fell, but found support at a certain level, from which an upward recovery began, albeit short-term. This rise formed the middle part of the pattern, the top of the letter W. However, this rise was not permanent and the price retreated again, forming a second bottom. The second bottom is of great importance in technical analysis, because this is the area where investors are looking for balance again, where levels that have been supportive in the past are retested, and where buyers often regain strength. In the current situation, the price is hovering around this second bottom, so we are exactly at the critical decision phase of the pattern. If there is a strong upside reaction from this area, the first and most important step will be taken to complete the W pattern, because the first target of this rise will be to reach the top in the middle of the pattern, and in the next stage it will move to higher levels. Another factor to pay particular attention to at this point is whether the pattern is completed with volume support. This is because usually the increased trading volume during the breakout of patterns indicates that the move is healthy and sustainable. In other words, as the price rallies upwards from the second bottom, the volume should also support this movement so that the validity of the pattern is technically confirmed. If these conditions are met, the outlook for investors is quite favorable. W patterns are not only graphical, but also psychological. Panicked investors sell on the first decline. The subsequent rebound gives rise to hope, but this hope is tested by the second decline. If the panic does not persist on the second fall, that is, if the price bounces back, market participants start to think about buying instead of selling. this causes prices to rise. From this point on, when the uptrend starts, the first target is the middle peak of the pattern. This level will also be a strong resistance area in the short term. If the price breaks through this area, the target will be to reach the highs where the pattern started. In fact, if this level is broken on volume, an upward movement up to the depth of the pattern, known as the pattern target in technical analysis, can be expected. When all these factors come together, the area where the price is currently located can be considered as a very critical and strategic area. Both the revisiting of support levels that have been tested in the past and the fact that investors are in the decision phase make this level an important reference point going forward. If the pattern is successfully completed, it would not only be a technical signal, but also a strong indication that market psychology is turning optimistic. One of the most notable technical developments on the chart is that the price has managed to break above the 200-day exponential moving average, which is considered critical as it reflects the general sentiment of market participants over the long term. These long-term averages are particularly important reference points in the strategies of both algorithmic trading systems and institutional investors. Therefore, the fact that the price has surpassed this level may indicate the emergence of a technically strengthening structure. At the moment, after moving above this important average, the price has slightly pulled back and is currently testing this level, effectively performing what is known in technical analysis as a retest. This is significant because this level, which previously acted as a strong resistance zone, is now being tested as a support. If this test proves successful, meaning the price holds above this level without falling below and buyers step in again, it could set the stage for upward momentum. Retests at such moving average levels can be highly decisive in determining the market's direction. This area often serves as a point of consolidation, support, and reacceleration. If the price holds firm here and reacts positively, it not only provides a technically bullish signal but also reinforces investor confidence. Investors typically interpret the price remaining above these critical averages as a sign that the market still has a bullish outlook and that buying pressure persists. Additionally, this type of pullback and rebound scenario often creates a visually appealing structure on the chart. This structure is commonly referred to as a break and retest formation. If this formation is successful, it supports the principle in technical analysis that previous resistance levels can turn into support, potentially opening the door for further upward price movement. If the support forming in this area is confirmed and the price begins to move upward again, it would signal not only a short-term bullish move, but also indicate that the broader trend is starting to strengthen to the upside. This would provide a solid technical foundation for both short-term traders and medium to long-term investors alike. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.